Hey Zach, this is Bill. Just wanted to go over this program here. So we got a $415,000 purchase with 15,000 seller contributions, $400,000 seller net. This was more for the seller than you. So rates today at 5.99. If I can lock that tomorrow, and no. So after the third year, or after year one, you're at 399. Year two, 499. Year three and on, you're going here. So 5.99. So the worst case, if rates shot up after today and will never touch lower again, you'd be at 2864 after 2 years. The first year 3.99 is the rate, and so this was the 5.99 rate. But this is the payment you're going to make plus your 379. That makes your 2373.57 is going to be year one there. Okay, so this is really the magic number that is. Now 379. I did a scenario. I believe it was like taxes on this. Um, Plus insurance came out to be 379. So that's about $900 a year for insurance. So if it's any higher, then we got to rerun these numbers. But this is kind of the worst case right here. So that means that the seller is given 15,000. So we're going to put 9201.48 in the account when we close. Your first payment is going to show its due of 2485 plus 379. So all of the paperwork initially is going to show 2864 for a payment. The paperwork at the end is going to show that we have $9,201 in there to pay $506 a month to be a payment of 2357 for the whole first 12 months. Okay. Year two, all of a sudden after your 13th month, your payment will go to 2604, 27, and then 2864 after that. If we happen to refinance in 6 months from now, after we close, you go into 6 months from now, you only use $3,000 of this instead of $6,000. You're going to be getting back 3,000 plus the year two of 3,000. So $6,000 would go right toward the amount of principal that would be owed. So if we still owe 412 or whatever, then because not a lot of money goes to principal, if we owe 412, $6,000 would drop. So you'd have a $406,000 loan amount. Okay. So the inspection, I think you're doing 450 was the inspection, another 150 in there for something, or for the radon or something, or this sewer scope. And then I just fluffed in here 2,000. That might be up to 2,000. If we close on the end of December, which is already the 13th, and holidays in there, I don't think we can do it. But if we go into January, then that would, if we close December, it's going to be low closing cost. If we close, let's say January 5th, you're going to have 25 days of interest, plus you're going to skip February, and your first payment's not due until March. So you have almost 2 months without a payment. So hopefully that makes sense. I really do think this is, keeping your payment under $2,500 is really the goal, and we're down to 2357. Kind of give, and all of your savings is not touched. So that's the ultimate goal. So have any questions, let me know. And again, this is kind of how the buy down works. Is the 2-1 buy down costs $9,200. The remaining money from that $9,200 is going to be $57.98. That's going to cover taxes, insurance, closing costs, and like I said, that could be $67.98 if we close in January, maybe even 75 up to 7,500. So I put this 2,000 in there to offset the worst case scenario that you would actually have to offset this. So have any questions? Let me know. Thank you.